Hello traders, hello everyone, welcome to our new webinar. It's January 6th. I wish everyone a happy new year. Just let me check if everything is fine here. Okay, can you see my screen? Is everything fine? If someone can let me know in our chat box. Hey Anas, how are you? Okay, Elliott is also here. Yes, we are good. Tim is here. Hello, Tim. So before we begin, let me just remind you that we still have this special discount going on, meaning the 30% off for our services on FX or crypto. But in FX, obviously, we cover also some other markets as well, which are important for overall market direction. So if you will find this content useful, if you're first-time visitor, either just subscribe to our YouTube channel, you will get the free content, or just visit our website for more information at wavetraders.com. Now, what's going on? Well, we have seen a pretty interesting reversal for the US dollar in the last few days. As you know, euro dollar had a very nice rebound, but not really sure if that's all it about the US dollar, or we will see maybe another push to the upside before we finally make an important top. Clearly, as I said in the past, that I'm looking at the January as a very important potential reversal more for the US dollar. So we are clearly very close to potential reversal, but I still think that there will be back and forth moves till Trump really takes office. Also, you have the FOMC meeting on Wednesday, and then not the meeting, but the release of the minutes from the meeting that was in December. So this will be quite important one, the details, because as you know, there was a change in rhetoric from the Powell on the latest meeting, and then on Friday we have the non-farm payrolls report. So I still think that US dollar could be a bit tricky here, but overall I think that we are in the late stages of this bull run. Now, one of the reasons why we are seeing this dollar weakness right now on a smaller time frame charts, okay, here is the 4-hour time frame. So one of the reasons why we are seeing this reversal happening is because Trump is reportedly exploring tariff plans to only cover critical imports. So in other words, it looks like that it's a strategic plan for that can have a positive impact on domestic economy. So maybe it looks like that maybe Trump will not deliver all of the tariffs and everything what he was discussing before. Also, the next important thing is that German inflation data on the yearly basis came out today, was reported from Germany, was 2.6%. Okay, the expectations was 2.4. The previous reading was 2.2%. So we are seeing euro dollar recovering. Obviously, this has an impact on the dollar index as well because of weighting calculations. And if euro dollar, if this inflation obviously will still be the issue here, then of course maybe the ECB will be forced to change their dovish views. As you know, they have been cutting rates recently, and maybe that's one now key time or prediction that could maybe change the flows going forward. In other words, maybe if the ECB will have to turn hawkish, this will have a positive impact on the euro dollar, and that's one of the reasons why dollar index may finally turn to the downside. Now, when it comes to dollar index itself and the wave count, as you know, we have been looking for this final push to the upside since we discovered and found the support at this trend line. And what we are seeing now, well, we can basically count 5 subways up within a wave 5. However, just 1-2 sessions is not really enough to confirm a top in place. I also have one scenario in in back of my head that could be potentially maybe even some kind of a ending diagonal. Okay, that would be an alternate scenario. So what would I have to see to make sure that maybe top is forming for the US dollar and that we are going then to see other currencies turning around, is if we start breaking beneath 107, okay, or 106.85 to be more precise. So why I'm looking at this level, because if that was the distance of a wave 4, and if I think that this wedge formation is also possible here, then the current subwave should not be longer than this wave 4. So that's why I'm saying that 106.85 it's the important level, because clearly if we broke this level, then it would not be possible to have the wedge formation anymore with another upcoming high. So also why I'm a bit careful here, it's Monday, okay, and the US sessions just start running, so it's very hard to say that these are real flows. Keep in mind that last week it was a short week, so now this week we could see some back and forth moves because of new positioning for the new year. So of course this is also something that is driving maybe these markets around at this time, but still you will have plenty of new data coming out through the course of the week, and this could once again change the overall direction. So for me it's very important to wait on a little bit longer before I fully say that this fifth wave is really finished, okay, because I don't want to be too early here and looking maybe on some potential shorts. I'm talking about the shorts that could last maybe could be intraday or could last for a few weeks, and these are the trade plans that I usually discover with our members. So for now it's a little bit still too early. We just basically retraced all what we have seen, all of the gains that we have seen from start of the month. So it's really going to be the key level down here, while the euro dollar is trading around, if we look at the euro dollar here, around 104. So you also see the second wave count for the euro dollar, the potential wedge formation if these levels here around 104.40, 104.50 will hold. So for euro dollar to turn bullish, I mean, I am expecting a reversal at the start of this year, but to make sure that fifth wave is really done and fully completed, I want to see maybe euro dollar start trading aggressively higher here above 105. Then I think that we would have quite strong indication that bottom is forming, and in such case I would be looking for potential opportunities on pullbacks. But overall, as I said, I'm expecting euro dollar to turn higher. I think that we are close to very important support level. We are at the 61.8%. So I think that sentiment down here, as you know, is extremely pessimistic for the euro, and I think that that's the perfect timing, especially in Elliott wave terms, where we can expect things to turn around. Okay, when there is at least expectations from other from the overall crowd, I just think that there is a great chance that market will surprise. Also the COT reading positioning, as you know, we are here at extreme levels, so plenty of shorts, but there was something similar back in 2020, 2022, and now 2 years later we are here in the same, 2-3 years later we are in the very similar positioning. So regarding price sentiment and the Trump will take office, I just think that we are at a very important potential reversal zone for the euro. So if we'll start seeing, as I said, some more upside here to invalidate the potential second wave count of an ending diagonal here, then of course I will be looking to buy the pullbacks with some short-term trades. Now when it comes to the 10-year US notes, ideally we are still missing this final push to the downside. If dollar maybe will really see another push higher and finally complete this whole trend at the new highs, then of course this retest of the lows is still possible. It's not even necessary that all of the correlations will be tick by tick, because at the important tops, important bottoms, not all markets will make trend change at the same time, at the same day. Okay, there will be some divergences, and I would not be surprised if that would be the case here, but certainly would be much easier to spot a reversal to say that maybe US dollar is topping out once we are here at new lows on the 10-year US notes, because that's when I would be expecting a significant change in the trend here. Now looking at cable, maybe higher time frame charts. That's the second wave count. Here's the daily time frame. No, this one. Okay, so here maybe a potential flat formation. We have been trading very close to this support here around 1.23 level. It's certainly very important. Maybe still another retest will follow, but overall I just think that for the start of the year, this whole zone is very important, and I would be expecting a recovery, even if there will be some just temporary recovery. I think that 128, 1.3 is going to be the next important levels on the upside. I just don't believe that cable will continue straight to the downside and broke through these supports. So watch out for some stabilization. Now on the 4-hour time frame, we already have some move to the upside, but again, not really convinced that this is the bottom here. I'm just waiting a little bit more. But if we break out of this impulsive channel, so if we focus on this trend line, okay, it's a trend line of resistance connected from waves to swing and waves for swing highs. So if we can start breaking above them, then above this trend line, then I think that we will have some very nice indication that bottom is in. But for now, I just think that it's good to be maybe on the sideline for now, because I clearly see that a lot of pairs are moving, these dollar pairs are moving into some very important levels, but it's not easy to recognize the exact bottom or top in any market. So I think that more patience is required here. Now if we look maybe on Aussie as well, I think that we have the CPI data from the Australia. Yes, its expectations are 2.2. The previous reading was 2.1. So if the expectations will be met, or maybe even higher, hot inflation, because we are clearly see this in different countries as well, maybe this will finally cause an important bottom here for the Aussie. But overall, you are seeing the price right now trading at the potential resistance. Keep in mind that there was a very strong drop here in the middle of December, so this could easily be wave 4. Just Monday and Tuesday reversals will erase all of the gains. That's very possible, if not probable. So for this, any kind of a bullish trends or invalidation of this downtrend, you would need to see the price firstly starting breaking out of this downward channel. Then 0.6440 is the next very important level, where overlap will clearly invalidate the bearish impulse here. Regarding the continuation level, or as we call it with our members section, it's a bearish level around 0.6224. Okay, so if we start breaking and recover and retracing towards this level, then watch out for fifth wave, maybe even the final push to the upside. By the way, I adjusted the wave count, so if you are our member and watching this, adjusted the wave counts a little bit because we have seen aggressive move, and I will post all of the updates maybe already today, if not tomorrow morning, on the page. Also, Canadian dollar is seeing some very strong movement, and obviously the reason is because, as you know, what Trump has been saying about tariffs from Canada and from other countries, and now when we have this new potential new plans regarding tariffs from Trump, that's why the CAD is making a hit back here, but still not really invalidating the uptrend. Okay, that's basically still a free wave drop from the high, and you are basically trading at the 38.2% and this at this channel support line. So to turn bearish here, in my opinion, it just too soon. It's actually a potential bounce area. So if we start seeing a new higher prices in the next 2-3 sessions and start recovering back to this range that we have been experienced through the Christmas and New Year holidays, then clearly this was just a stop hunt and we are going back to the upside. Okay, so be very careful with potential shorts down here. Also, if you look at the dollar yen, another pair that and the price action, which in my opinion is not showing any kind of a top yet, at least not in the short-term basis. I'm looking at the 2-hour time frame here, and you clearly see if you just, even if you're not maybe familiar with the Elliott wave principle, well, what you clearly can identify very easily is a very strong recovery. And then sometimes I help myself with just simple boxes, okay? And what you see here is just consolidation. So very strong move and a consolidation, and usually this represents a pause. So in normal events you should see another push to the upside out of this consolidation. And if you then try to apply the Elliott wave count to this type of price personality, then clearly you can label this as a potential wave 4. Okay, so you always want to discover potential opportunities with the clear wave count. And in my opinion, this whole price action still shows that there can be another push to the upside. The important is that Ueda somehow, I think that there were some, during Asian session, there were some hawkish remarks from him, but we clearly haven't seen a push lower during his speech, or I'm not sure if there was speech or just some headlines, but overall this weakness came through dollar yen down to 156 when the news regarding Trump tariffs came out. So what we are now seeing, well, the price is just stabilizing down here around 156 once again. So clearly we can be missing another and maybe final push to the upside. And 159, 160 in my opinion, it's the real potential resistance. So you can see that all of the currency pairs could maybe see another push higher on the US dollar before maybe we finally complete this this dollar trend. But of course, as I said, on some of the pairs we should observe and keep an eye on some levels, maybe to identify the potential reversal for the US dollar even earlier, if this is really going to be the case. Also regarding dollar Mexican peso, I have been talking about this one in the past. We retested the highs and once again came to the downside quite aggressively. So that's very important for overall outlook of an ending diagonal, because we have, and bulls once again failed to push extremely to send the price action impulsively to the upside. That's how I should define this. So in my opinion, this is just another indication that bulls will have a hard time here and that they are losing strength. So I think that there is a very strong reversal yet to come here on the dollar Mexican peso, and if we start breaking 20 area here, it's a very strong support. Then I think that shorting pullbacks, shorting rallies would make sense here. But overall, I just don't believe that we'll see any kind of a real strong straight move to the upside like a wave 3 or something. I just think that this whole price action, at least from start of September, is showing us that this could be a wedge shape, and that at least some pause, higher degree pause could take place here in the first part of this year. Now looking at gold. Gold is coming to the downside right now quite nicely here, and I've been sharing this wave count with our members earlier. I said that clearly we rallied just with 3 lags from these recent swing lows, and what's happening right now is we have a very strong sell-off here. Okay, so looks like that market may try even to break this trend line this week. If we start falling below 2,600, I just think that more downside will clearly be visible. If we hold it and rebound away from it, then maybe this will be some kind of a triangle here, but a bearish one. But the overall view is for me still that we are in the middle of this consolidation, okay, and that this consolidation is not over yet. I know how everyone was bullish on metals and still are, and that's why I think that there should be a little bit more of liquidations on the way up, on the way down, before this market may finally again recover and we maybe explore new opportunities to catch the fifth wave. But I think that ideal support will be down here. Of course, that's only if we'll have a simple ABC drop, but because sometimes maybe the market could form much more complex, maybe just more sideways rather than deeper price action, and maybe even bullish triangle is not out of the woods here. But overall, I think that this correction is incomplete, okay, and that we have a time left before we may finally find new opportunities on the upside. Also, if you will look at dollar Chinese yuan, this one hasn't moved to new highs yet. Let me just make this one, no, just a second. So here you have this high that is very important from 2022. We came very close to these levels, but not really breaking out here. So I think that this still we have some room left for this recovery, and if dollar Chinese yuan is still in this recovery after this pause here that can be happening right now, then it means that most likely we are going to see more consolidation for gold. So I think the that opportunities on gold will show up when we will finally have some very strong reversal here on dollar Chinese yuan, because that's always when dollar Chinese yuan started to turn to the downside, that's when gold started to break higher. But for now, I still see this ongoing fifth wave. Also, gold silver ratio, we talked about this one in the past. We are testing this channel here, and maybe we are going to see a break higher, and this could push metals further into consolidation that we've been talking for a while now and tracking for a while. And I just think that even silver, of course, in such case could make much deeper pullbacks here. But I think that both gold and silver will have still potential long opportunities sometime this year, but I just think that right now it's a bit early. It's nice to have some bullets on the side to catch the longs if we suddenly see more weakness here. Now, if we take a look on some of single stocks, here is nvidia. Now, nvidia obviously very good for technology sector. What I'm seeing right now here is that this drop has been also only in 3 waves, so it was 4th wave, and I think that the 5th wave is yet to come. New all-time highs are coming, but I would not get too excited once we are at new all-time highs, because clearly this could be a wedge formation ending diagonal. So very big surprise may happen at these new highs. Still think that this year we could step into corrective territory, but at least in the short term, maybe this will be positive for cryptos. As you know, we have seen also some interesting pullback on MicroStrategy as well, and we define this potential support zone. That's Microsoft. Here it is. This support zone, and I talked about this more than a week back. That was the potential gap, potential support zone. So if we will start trailing aggressively to the upside, I just think that obviously this will be positive for cryptos, and maybe even Bitcoin. Then we'll not see a retest of the 90,000 level. I will show some of the wave counts for the Bitcoin in a second. But before we get there, let me also look at Tesla. Now, Tesla is also making a very nice pullback. We stopped at the previous swings here, not the swing high, slightly lower prices, but definitely this one is also very important. Slightly below 400, we had 384, so that was the key support. And as you can see, obviously in pre-session, pre-market, we are trading higher, so looks like that we have some very beautiful price action that could drive us even higher. So we have some single stocks that are still looking good, but then you have some of them that could potentially be already looking for our reversal. So you will have to be very selective here when you're looking at some of those big names. I mean, if you look maybe on just Microsoft here, despite some gap right now, well, we are completing this wave B rally. So as you know, I have been warning that potential top can be forming here, and with this current sell-off that we have seen from the 78.6%, I certainly cannot rule out that wave C is missing here within a higher degree wave 4. So maybe we'll get some very nice pullback here. Looking at PayPal, this one came close to not really that close to 100, but I still think that 100 is yet to be tested. If you look at the maybe at the substructures here, let me bring on some fibs here. So we are in a wave 4. The wave 4 will usually retrace for the 38.2%, sometimes only for the 23.6%. It really depends how extended is the third leg. But if you start seeing move beyond the 61.8%, then of course it means that something is changing and that's not the wave 4. So with that being said, that clearly was defined as a first support, but I would keep an eye on the second one here around $80. But overall, after these pullbacks, what I would be looking for is continuation higher. Let me check if I have this one here. I don't have it. I would be looking for a continuation higher, as I said, towards 100. It was also the swing high here back from 2022. And if you look at the head and shoulders projection, we get numbers around 98, so close enough to 100. So because we have this upside target still unmatched, and because we have the incomplete ongoing wave structure here, I just think that this one is yet to come higher still at the start, maybe already at the start of this year. Now someone is asking, don't forget on the S&P 500 here this. So the S&P 500 overall, as I said already in our 2025 video outlook, I said that most likely we will see even higher prices on those indexes, especially if the dollar will top out here and we'll see a sell-off, a strong sell-off. This could make some blow-off moves on stocks. But when it comes to discovering potential opportunities here on the indexes, I really do not see them, okay? At least not at this stage. Maybe I just need to have some more price action to call this as some continuation, smaller triangle here. But overall, I just don't see this as a potential opportunity to catch, to join the uptrend here. I just think that much better and easier opportunities will be discovered if we'll see a deeper prices. Okay, so I'm just staying aside here. I don't care if the market moves straight to the upside. I just don't see the opportunities here. But if you're maybe a long-term holder, and or if you are investing on a monthly basis or so, of course this it may not be important. It would be even better if we start seeing maybe pullbacks and you will get some better entries for better entry average prices. But when if we go to maybe to the 4-hour time frame, what I'm looking at here, maybe we'll just stay consolidating here. Keep in mind that we can clearly retest the higher range, but I don't believe that we will start breaking to new all-time highs any aggressively here, at least not till Trump is back. So maybe we will see some back and forth moves. So that's why I said that maybe even a triangle could take place here. We clearly didn't retest or take out the previous lows yet. So who knows, maybe that's about yet to come. And if we'll see some lower prices, I think that 5,700 maybe could be the first attractive support for me. But at least stage, with the whole price action, what I'm seeing right now, right here, is just not. It's not something that I would put my longs on. Now, what I left. Okay, so Bitcoin. Well, Bitcoin is clearly in consolidation. I'm just surprised that now when we had seen this dollar sell-off today, which was quite aggressive, we haven't seen any kind of a real push to the upside. I didn't have my quotes on for Bitcoin and I thought it was already above 100,000, and that's not really happening. So if really dollar would just stay consolidating through the week till we have maybe these details from the FOMC minutes, or if we will maybe even have to wait till non-farm payrolls report, and your dollar will not maybe start trading above 105, and dollar would really move back to the upside, then clearly Bitcoin can consolidate further. Now, when it comes to the Elliott wave principle, of course, the ideal would be to see another leg to the downside, to have wave C that will drop towards 85, 90,000 area. I know that there are a lot of traders that will start looking for potential top if we see this price showing up here. But overall, I just still think it would be too early to turn bearish if we start breaking 90,000, because I see as 85 as a very important support. If you look here on the 4-hour time frame, you have the 38.2% right there, and also if that's going to be the correct wave count, then wave B is clearly now at the resistance and 100,000 mark. It's definitely very, very important. Even some head and shoulder stop formation cannot be ruled out here. I'm not saying that that's going to be the case, but I'm just saying that what kind of scenarios we should be aware of, and this should bring us our attention for potential further sell-off here in wave C. So I think that's a very strong big support. But of course, there's possible that dollar has stopped and that we will see maybe stocks straight move to a new all-time highs, and we will see Bitcoin that will remain trading above 91,000. But still, I would not say that wave 4 has bottomed here. In such case, what I would have to see is maybe more sideways price action to the right. And then I would maybe look for this kind of wave count where we are looking for potential triangle then. So I still think that there can be some pullbacks, even if that's going to be a triangle, can be opportunities on the heat map. We are not seeing any kind of a real big orders here, at least not at this stage. But if you look here, maybe at 1 month scale, you can see here that's or above 100,000 here. So maybe we cleared those out, and then we will start, if the price action will start maybe moving slightly to the upside above 100,000, maybe there will be new liquidations of potential new longs start building, increasing down here, and that's something that I would love to see. Okay, but for now you can clearly see that there are no big orders on any of the sides, at least at this stage. So maybe this is another reason why Bitcoin could consolidate a bit further here. When it comes to alts, I still think that Ripple is very interesting. As you know, it has made a very nice push to the upside. Some are trying to join the trend here. Maybe there is still a chance to catch this fifth wave, but overall, if we'll start seeing push to new highs here around $3 or even higher, just keep in mind that that will be a very late stage for to get into this coin. So just be aware that we are now in consolidating in a wave 4. Maybe this one will take a little bit longer for traders to finally to give up on the potential longs here, because I know that there was some new inflows here at the end of November, but now clearly for more than a month now we haven't gone far. So there will be some liquidations on the way up. Especially the big liquidations would happen if we see a break below 1.87, but I think that 1.8 or 90 around there, but 1.70, 1.80 there, that would be still a very important support for this fourth wave. And as I said earlier, it's very difficult to always to say where wave 4 will complete itself. Could be finished here, could be triangle, could be lower. So you have to be very flexible and not always easy to find a trade with the proper smaller risk rewards here, but we are seeing and tracking some interesting patterns with our members on a smaller time frames here, but still need a bit more of price data to fully confirm, which maybe will allow us to catch the fifth wave earlier here. Someone is asking for the Ethereum, so this will be the last one for today. Ethereum is coming slightly to the upside. Currently we are at some key levels because what I'm seeing is free wave rally here. So it's a very important resistance potential around 3,700, but overall I just think that sooner or later we will start seeing the price that will break out of this triangle, but I would not be chasing the markets here with and enters here with any kind of trades right now. What I would wait if I will be looking for potential longs if we suddenly, let's say, we drop back below 3,000. I think that would be a massive support. In such case, maybe still we will have this wave E playing out, but overall, as I said, this appears to be like a consolidation that sooner or later maybe will award us for the fifth wave. But as soon as we start break 5,000, I just think that this will be a very late stages for not only for the Ethereum but also for the whole cryptocurrency cycles, because on the Bitcoin obviously we will expect a top in 2025. Okay, traders, I hope that you enjoyed this content. So as I said earlier, if you're interested in more of this analysis, make sure to check our website at wavetraders.com, or just simply follow us on social media, follow us on YouTube. Make sure to subscribe to our YouTube channel, press a like on this video so that we will be ranked higher on the YouTube. Okay, traders, good luck this week and talk to you next Monday. Bye.